Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 18th day of February 2015, and this is the daily report for gold and silver. Interesting scenario brewing in the precious metals markets as we see a pretty dramatic recovery after we saw the markets dip to some lows. In fact, the low today in gold, 1198.20. The high 1212.20, currently trading around 1210 and change, puts it up $1 to $2 on the day. Silver is trading lower on the day, off about 2 cents, currently trading roughly at 1643. The high 1654, the low 1627. More on silver in a little bit. So following the release of minutes from the most current FOMC meeting, which were construed as dovish comments, one comment that was made was patience. In other words, they will be keeping interest rates lower, was very, very supportive of gold. What I find most interesting when we look at this market on a technical basis is the low that it hit. We talked about this a little bit yesterday. And in fact, I said that I believe gold had really nowhere to go but 1198. But the fact is we actually have hit that point and had a fairly substantial bounce off of that point. And so the question is, have we seen the last of this corrective action in the market, or are we going to simply see the market come up, maybe find some resistance at 1219, and then meander further down lower in terms of pricing? That's the big question that we're asking ourselves. And so the real key is to take a look at where we are in terms of the marketplace price point itself and look at it in terms of different charts. As you can see, no doubt about this, there is absolutely a technical reason we could find support at around $1,200 per ounce. But let's take a look at another chart. And this is the chart I'm speaking of. We're looking at a weekly chart. This is the continuous contract of gold. And on this chart, as you can see, I've got this long-standing resistance line. And in fact, it was this long-standing resistance line when it broke above it right here that initiated our first trade of the year. That's what gave us some indication that we could be, in fact, out of the bear trend that's been prevalent over the last few years. However, the market stalled roughly at 1300 and came down. Now, I'm going to really blow this up so you can see what I'm looking at right now. But what I find quite interesting is the fact that if we look at this line right here, you can see without a question of a doubt that that matches up, that low at 1198 matches up with exactly the bottom of this resistance line. And so my sense is if it can find support in this area, it does have some real strong probability that we'll see it move up from there, because that tells us that we could still be in some sort of a bullish trend. However, any kind of break below this signals dramatically lower prices, and that to me is my current take, that we still have a high probability that we will see this market back down a little bit. So traders, there's yet another chart that I do want to take a look at. We haven't looked at this in a while. It's our 2-day continuous contract of gold, but in this particular chart, we've had our channel line. So as this market was trading lower, we were able to plot exactly where it was within these channels. We had our last channel here. We determined we had a breakout above that, and lo and behold, again, this comes to really this level of former resistance, which now, in fact, could become support. So that's what we want to look at over the next couple of days, is whether or not this particular level can find some support in terms of a price point for gold. And traders, you can really see the recovery that we have seen as this market dipped below $1,200. This is that low here. Here's 1,200. We have 1198 as our low. We can certainly see that it dipped below there. It's almost a very, very doji-like candle, but we've seen them before. As we talked about this inverted hammer, we had our follow through, but then the market just literally broke down the following day, of course, which was just yesterday. And today we make a lower low on the day. But as I said, it's currently trading up a couple dollars. And so what we really need to see is how the market reacts at this price point, because my sense is that if we dip back below this particular area of 1,200, we're going to see substantially lower prices. However, if we can find some support in this area, we could get a nice rally up. And so traders, that's why I really believe we are truly at a crossroads in terms of where gold prices are right now. You can see this particular line right here. It is both a 61% retracement of the entire move, 61% retracement from 1130 up to the top of, call it 1308, 1307, 1306, and then a 76% retracement if we only look at this past rally right in here. So we are at a level in which we could hope to find support. We did get a pretty strong bounce off of this particular price point, but we've seen bounces before that were short-lived at best. We've seen areas where it attempted to find support and broke through, and so I'm not entirely convinced that we've seen a bottom yet. However, we need to be open to the fact that the way the market bounced off this area, it could be really a supportive area. We will maintain a position of being sidelined in the market. We are letting the dust settle before we enter our next trade, but these are the factors that I'm looking at. So traders, some of the other markets that we are looking at, first to crude oil weekly chart, you can see that right now we are looking at the first down week that we have seen in approximately a month, this being the fourth week from these lows at 43. Market is just teetering above $50 per ounce, currently trading 51.70. When we look at the equities markets, this of course is a half a day chart, but we did hit a record historical top yesterday. We have backed off of that top. You can see that right here. Market's currently trading at 20.95. The dollar continues under some pressure here on our weekly chart. We're really back to the open at where we opened on Monday. We have a pure doji, 94.18. The second thing that we can say is that we absolutely got some real resistance in the market when that index hit 96. And lastly, we'll take a look at silver this morning. As I said, currently trading off about 2-3 cents. You can see this small candle here. Now, like gold, it did make a lower low on the day. However, when we saw the gold market react to the minutes being released by the FOMC meeting, we didn't see that same reciprocal effect in silver. My sense is that we didn't see it because we had some weakness in the equities market, so that industrial component of silver kind of kicked in. My sense in terms of silver right now is I am looking at support at roughly 1610. I'm looking at resistance right now at about 1710. We are trading about a third off of these lows. I would expect to find support, but we're not getting the kind of clear, concise crossroad signals that we are in gold. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.